Friday, September 26th is my dad's birthday. Happy birthday, Daddy. You won't hear that on many Guy podcasts, but happy birthday, Daddy. Not Diddy, Daddy. And I got some Diddy jokes for you. Just be forewarned, this will be an absolutely long episode. Please turn on 2 times. Listen to it at 2 times because there's a lot going on. And I'll start it out with, we're in a good news is good news market, and there's a lot of good news. But what are we going to go over? We're going to go over last night. I was on Spaces, just a masterclass with a 7 investing group, and they were fantastic. I mean, just their founder was an ex-Motley Fool guy who left Motley Fool to start his own stuff. My assumption is Simon just didn't like Motley Fool, but I'm sure he still loves those guys. It is what it is. But we talked about specifically Rocket Labs and SMCI. He turned me around on Rocket Labs. SMCI, still have questions about. There's still risk out there. S&P, how high will it go? Tom Lee kind of explains it. I got 2 Buffett clips, Warren Buffett clips about Coke and building portfolio that are great. China ETF that buys Hong Kong shares. I did the research for you, so I found one. Why you don't want cash? We'll talk about Webull. I like Webull more than just like Diddy likes baby oil. We'll talk about how Diddy with baby oil, how is that bullish for Costco? Maybe they're going to, today, his lawyer blamed it on Costco, bulk buying. Uranium stocks, VKTX, new price target. GLP-1, we're in that market. Crypto, how Bitcoin has to hold 65,000, what that means. Meta is just a monster stock at all-time highs and continues to just compound it. And analysts have chased up the price target. NVDA, why that one's still good. It's up like 4% today. It's crazy. Year to date, the winner in the S&P, it's not NVIDIA anymore. We'll go over that. Tesla, October events, it's up over 260. We'll go over that one. Earnings, Micron killed it. Costco tonight, some educational stuff, and then the social requests. Let's start off with, oh shit, we're all screwed. Jim Cramer last night said the U.S. economy is stronger than ever. If you are inverse Cramer camp, we're all fucked. This is all-time highs. This is it. We're never going to get higher. We're going to crash. If you're inverse Cramer, that's what that means. I will argue, too, if you haven't watched this clip, okay, this is Mark Minaveri, I think is his name. He's a trader. Fantastic trader. He will never live this down. Never. Absolutely never live this down. Watch this clip. It is unbelievable that a trader would go on CNBC, and again, go on CNBC and not know what the company that he's trading does. That's what happened here. And look, Dow 1% from record high. When this happened, it was way back in like 2020, I believe, somewhere in that neighborhood. It might have been 2019. I don't know. Or maybe it was 2021. I'm not sure exactly when of the date. You can look it up. But don't be this guy. Don't be this guy. Just don't be this guy. Like I said, we're in a good news is good market. Be careful. The fear and greed index is continuing to rise. That's not when you want to buy. Today, the Qs are up 1.6% just in pre-market. Why is that? China added stimulus. China added stimulus. When the number one economy is saying that they're going to add stimulus, that's huge. Because again, we're all interconnected. We're all tied. The Qs are trading at 493. What's the all-time high? 503. The Qs are going to all-time highs. Okay? VOO. We're at the all-time highs on VOO. In pre-market, you're at 529. What was the previous all-time high? 527. Let's see. High 527. So you're going to open up at all-time highs. SPY, we talked about how most price targets for the end of the year are around 5,600, 5,700. They're going to take this shit up. In pre-market, you are trading at 574. All-time highs. Again, all-time highs. We are in an AI and a GLP-1 market. Okay? I like this market. Am I upset that I'm not 5% additionally in yet? Yes. I waited too long. I'm going to wait for a pullback. I am not getting in to this bull run when the fear and greed index is up like that. When we can go to the VIX, okay? I told you before, the VIX wants to be at 20. Where is it? It's at 15. It's at 15. Look how low it's come in 1 month. You don't want to get into a market like that. Could you get into individual stocks? Absolutely. You've just got to buy them at the right point. I would argue today's not the day to buy stuff like this. It's a Thursday. Tomorrow's Friday. We don't buy on a Friday unless there's a reason. And I don't see a reason to buy into a bull market when you're at greed. Unless you have like 20% in the market. Then dollar cost average your way in. Because if you're out and you've been scared, that's the problem. I've been saying, hey, this 5%. I know I've been focusing on the glass is half empty. But my glass was 90% filled. 90% filled. And that's probably the way I should have been putting it. But you do you. Again, you have to sleep at night. Watch this one. Don't be this guy. Now, here's the link to the spaces that I was on last night. I was on Spaces. I think it's perfect. I think you go to it's an hour and 15 minutes, I think. I think that's where it is. Basically, a man named Simon, who's in charge of 7 Investing, he got on and he started pitching Rocket Labs and SMCI. I was the first one, by the way, if you just want to listen to the first part of the podcast, I was the first one saying, hey, long-term investing, this is how I made my money, this is blah, blah, blah. You guys have heard it before. I use Spaces more for promotional purposes than I do like breaking any news. This podcast is where you're going to hear all the kind of in-depth stuff. You won't hear in-depth stuff on Spaces because people just talk too much on there. I get bored with all the stuff that people talk about, so I assume that people get bored with me talking as well. I use it more for promotion, but I think in the 1 hour mark, it's around 1 hour, you want to go on there and listen to the seven investing stuff because Simon, fantastic speaker, just a fantastic speaker, and he had 2 stocks. And 7 investing is kind of like Alpha Picks. They give you a couple of picks every month for like $200 a year. It's a great, I don't have a referral link for you, but you can use the code WOLF if you want to sign up for 7 Investing. You can use the code WOLF and get your first month for free and get a free 1 month trial. I really liked it. I'm tempted to actually sign up because those guys were so good. I want to see what they talk about on their monthly space. That's what I want the newsletter to turn into, the paid newsletter. But they're doing a great job. Rocket Lab, he may have convinced me. I hit him up with such a barrage of, hey, I said, Rocket Lab, they're losing $177 million. They only have $500 million of cash on hand, and space is expensive. I've never been a fan of SPACs. The weekly chart doesn't even have a 200-period line. Why are you trading this? It's broken out and has some resistance at $8. Let's go and look at the chart that I showed him. So this was what I was looking at when I said, hey, at $8, and we've gone over this one before. You can see between $6 and $8, I said this one, the $6, it was a pullback. It supported it at $6. You could have bought this at $6, and then it bumped up there. Go and look at the weekly. It's clear. Look at that resistance, how it bounced right back down there, and then it came back down here, and it bounced back up. Okay, that was your indication that this was support. Now, this is your next resistance. How did it react here? It bumped up there and continued up. Where would I expect the next resistance to be? $11. That's where it is. I brought all of this up to Simon, and he basically fights. And it wasn't a fight. It was a debate. It was good. Anybody could be right on this one. But he brought up specifics about the company. Stuff I don't even investigate and stuff like this. Again, I'm not into this, but he brought this up. Then we went into SMCI, and I brought up my concerns about SMCI and how I'm 100% in this as far as my position and how it's profits. And he brought up there's risk. There is absolute risk. And he said part of that short report was probably correct. But I think it's just a masterclass. Again, I'll post this in the newsletter, the recording, so you can listen to it. It is just audio. Most of it, I do kind of, banter back and forth with a couple of people who said, you don't want 60% of your portfolio to be Apple. Well, whatever. And again, the debate is the debate. I could be wrong. I mean, Apple could underperform the market for the next 10 years. I don't think it will. And it's been, the winner of mine. But again, the market humbles everybody. So I never want to say that somebody's wrong in telling me that. I've just ignored that advice my entire life. And it doesn't, again, it probably didn't make sense to anybody because I'm the only one out of my friends who has made that amount of money in the stock market. But I seem to have some type of ability there. So again, I thought it was a really, really good discussion. This is something that I'll post in the newsletter as well. Warren Buffett, $1 billion Coca-Cola investment. In 1988, you started buying Coke. Why? And then Charlie brings up, well, if you why didn't you sell it during some peaks and valleys and stuff? Warren answers it perfectly. Again, I'm kind of trying to teach you there are people out there that you can learn from who give you advice on some things. And you can take that advice and enter it into your system, your process, your abilities, whatever you want. But Buffett explains that perfectly. Why do you want Coke? Okay? When we're talking about the fear and greed index, you can look it up on just on the internet. But notice, this is a daily chart of SPY. Notice here in August where extreme fear was at 23. And we're approaching right now extreme greed at all-time highs. Okay? It doesn't mean that you're going to automatically pull back. Again, China putting in some austerity measures where they're going to feed stimulus into the economy. The U.S. cutting rates. All of it is good news. The unemployment numbers continuing to go down. Inflation continuing to go down. All of it's good news. That's the point. Is that when you're up here, I tend to not buy for the long term up here. I tend to trade up here. And you can absolutely trade. But up here, I tend to do the kind of short term stuff. And I tend to pull out any of my losers. Any loser that you have in this kind of market, consider a loser. I mean, that's the thing. You're at all-time highs. If your stocks are not at all-time highs, you've got to ask yourself why. So, talk of the tape, how much higher can we go? Tom Lee says it. I haven't listened to the actual clip, just be forewarned, I haven't. Tom is a huge bull, a perma bull. He was a bull in 2022. Turned out to be right. I'm in his camp. I just think that this guy saying that the IWM can triple in the month of August and then not becoming true, nobody focuses on that. Everybody focuses on when he's right. He's wrong just as much as he's right. He makes crazy claims. He's good. He understands the market. He understands and he can see things, much more clearly than a lot of other people. Now, how do you manage a portfolio? This is it. The one question Warren Buffett asked before selling stocks. Go and listen to it. Stock doesn't care that you own it. Again, he takes emotions out of this. And he doesn't time the market. People with stocks, they think the stocks they own are more than they do. It was said on Spaces last night. I think Shai said it. He is super tied to some of his stocks. It's the worst thing you can do. Don't get emotional about stocks. They don't care. There's no emotions in the market. If you've got emotions in the market, I want you to go over to my link tree and sign up for Trendspider, okay? Sign up for Trendspider for $53 a month. Get the 4-hour algorithm. Because again, you look at a company like Tesla, and we're going to talk about Tesla. I said that the resistance level is going to be 260. You're at 262 right now. There is no way in the world that you would sell going into that kind of strength. Yes, you wanted to maybe trim it, but you should still have, if you got in at this point, you should still have the large majority of your position. We never lost confirmation. The algorithm has you still in. If you just trade the algorithm on Tesla, over 24 months, you're up 171%. How much if you bought and held Tesla? You're down 16%. I give you the 4-hour algorithm. It's right there, $53 a month. So if you're going to Warren Buffett and you're saying, well, I don't know, I love this stock. I love this stock. Get charts. And if you can't afford Trendspider, again, it's $50 a month. If that's too big a cost for your portfolio, get a free tool. Learn charts. Take emotions out of it. Any chart will take emotions out of it. Okay? Because you need to set up a system where maybe over the 9-day EMA, you sell. Under the 9-day EMA, you buy. Maybe it's 50, maybe it's 200, depends on your time frame. But Warren Buffett has never used a stock chart in his life. And he takes emotions out of it. He said the stock doesn't care. So Seeking Alpha did a survey of their readers. Which sector will benefit the most from interest rate cuts? Real estate. 58% said real estate. And if you go over here and you look at the U.S. sectors, where's real estate? It's number 4 in 1 month. Utilities is number 1, doubling real estate. Real estate over year to date, it's up 11%. Utilities are up 26%. Technology is up 16%. Over 1 year, real estate's up 29%. Okay, it's in the middle of the pack. Over 3 years, real estate is up 2.7. Find a real estate stock. Okay, you can go into XLRE and you can go into the holdings. Prologis, American Tower, Equinox, Welltower, Public Storage, Realty Income, Simon Property Group, which is part of the core portfolio, Crown Castle, Digital Realty, Extra Space Storage. You can use United Rentals, I believe, as part of real estate as well. You can find a ton of stocks in real estate. What's the best sector? Now, here's another sector. Uranium stocks. This is energy. This is a company, the sector is starting to heat up, and a name like Centrus, LEU, is launching out of a 3-year weekly triangle setup. Okay? Centrus, LEU. Let's look at LEU. Let's look, and I haven't looked at this. Let's see how the 4-hour algorithm, how I would trade this. 4-hour algorithm doesn't do very well. It loses you 17%. Okay? Because it's in and out. It's probably in an upper left to bottom right trajectory for a long... Look, it's sideways. And again, you had this high back here in 2021. You haven't hit it. The high was $88. You're at $54. Okay? I would say uranium, probably a pretty good bet. Look at this weekly candle. Look at the increasing volume. And your RSI is quickly up at 63. It's breaking out of this range. Now, if it gets, I would say, if you get above 57, look to 80s as being your next target. Let's just look at some of the fundamentals. And again, this is how you use the tools to look at this stuff. LEU, strong buy in the quant. Okay? The valuation, not crazy. Now it's got an $896 market, $96 million market cap. That is not large whatsoever. That is not large. You can read this analyst report, Centrus Energy, Securing America's Energy Future in the new dawn of nuclear. It's ranked number 2 out of 15 in the coal and combustible fuels. What's number 1? BTU. That's a coal provider. Okay? Now, this is just in the quant. Let's go and look at some of the fundamentals of this one. Let's look at the valuation. They're not making money, but they are expected to. Okay? Their growth is really impressive. Revenue year over year up 19%. Leverage free cash flow down 46%. Nuclear is expensive. Profitability, they're going to start making some money. Return on common equity, 403%. Again, you can take a look at this. It's a strong buy. Let's see what Wall Street targets this at. There's 3 analysts that cover it. So take the average price target with a grain of salt. But it's $67. And yes, they've chased it up. And yes, it's fallen down. Would have been better to get this at 39. But 67 isn't bad from 55. The 52-week range is 33 to 61. You probably have 61 with the burgeoning of nuclear in this one. It's an interesting one. That's how you use the tools. And what did I use? I used both Trendspider to try and find a strategy to do it. And in the chart, you can see right here, if we just look at a strategy, you can put in this channel and just say, okay, I'm going to say that is probably the bottom right there. And then you can say this, if this is the top, because you hit all of these weeks of resistance, you hit that week of resistance, and now you're breaking out. Okay, right now you're trading at 55. That line right there is about 53, 54. If you hold that one for next week, I think you move higher. That's how you use these tools. The second tool that I used is Seeking Alpha Premium. That's the second link on Linktree. Okay, that's the quant. That's how you find out the fundamentals of the stock. If you have a free tool that has fundamentals of the stock and you can track it, go and use it. My link saves you $25 off the premium membership and you get a free 7-day trial. Okay, simple as that. LEU. That's how you use some of these tools. Now, let's talk about another one that I'm not familiar with. This is VKTX, Viking Therapeutics. I kind of remember to go back into China and Webull. But VKTX, this is Viking Therapeutics, okay? Let's take a look at this. They are chasing this one up. They're raising their price target. Oppenheimer raised the price target, $138. Where's it trading right now? VKTX, let's look at this one. VKTX, look at that just weekly one. VKTX is 63. They raised it to 138. Okay, does it have it in the stock? Well, look at how it pulled back. Where's this one high? $99 back in February. $99 back in February. The MACD on the weekly has reset. The algorithm makes you over 24 months. Okay, get ready for this. Over 24 months, 25 positions, you make 908%. Okay, so say you put, $1,000 into this. Over 24 months, it's now $10,000, close to $9,000. Here's the shocker. If you just bought and held, you made $2,100, so it's worth $20,000. Or what? Yeah, whatever. Gary math. I don't know what it is. But again, if you put $1,000 in there, it's probably worth $20,000. But it's probably worth more than that, to be honest. But again, this is one that we're in a GLP-1 market. If you look at the fundamentals of this one, it's trading at 63. Wall Street says it's a strong buy. There's 13 analysts that cover it. Their average price target, $109. If you have $1,000 sitting and burning a hole in your pocket, just put it in there. Just put it in there. This could turn into $20,000. Do not, if you've got a $1,000 or a $5,000 portfolio, do not take $1,000 and put it in here. Take $100 and put it in here. You don't want to bet too big on something like this. I've seen too many biopharma companies get something in the neighborhood of, hey, we're going to lose this one. But we are in a GLP-1 market. You want to know why? Carl from Instagram sent me this last night. I just took a picture of it. Okay? You stub your toe? GLP-1. You have hemorrhoids? GLP-1. They'll prescribe anything. Bloomberg just reported Ozempic reduced opioid overdose risk. Again, you get, just like you said, insert anything, you get GLP-1. Viking Therapeutics. It's a good one. Now, I did do some research on China, and I did it on Fidelity. I didn't use any of the paid tools. Again, it was a free Fidelity search. But FXI, my understanding of it is that it holds all of the Hong Kong shares for China. So this is one that I would say you could safely buy and hold. Okay? It's an international equity. The expense, we can look at some of the peers of this one, GXC. I don't know if these are, all of these hold them. But this is the big one. The assets under management, $4.23 billion. So we can look at that. Quant says it's a strong buy. Momentum, A+. Expenses, D. It's expensive. But again, this is holding the Hong Kong shares. So if the U.S. gets in a diplomatic issue with China, these shares are still good. FXI, it'd be a question of whether U.S. people can own these ones, whether they could still be listed, whatever. But again, FXI is the one that you want. We're in a China momentum stock right now. They are putting money. And it was David Tepper who just pointed out on CNBC this morning that he's going to go all in on China. And part of the reason is he said China government is actually going to give Chinese companies money to buy back their stock. How do you think Apple's been going up all these years? They take their money and they buy back their stock. That's huge. They're going to give money to the companies to buy back stock. That's how they're propping up their stock market. And you don't want to get in the way of that. It could crash. It could absolutely crash. We can look at the chart of FXI. Do you want to get in? I guarantee you it's 25 and you're at 29 in just a few days. Again, this isn't one that you want to trade per se. It's upper left to bottom right. So you're trying to time this. The algorithm makes you 8%, 8.7% over 24 months. If you bought and held this, you're up 6.3%. So I think we're reaching some type of bottom on this one. Do you want to buy right now at 29? RSI is super high at 75. The MACD super high. You've got gaps all over the place on this one. I would probably wait until you get down to 28 or so, but this could easily go to 30. Look at how far it's come down. Where's your 200-day? 32. I would say that's the next resistance level of this stock. You can see right here, 33 is where it capped out before. You can see if I put just a horizontal line at the weeks where it just popped, you're seeing right there at 30. If I put another horizontal line, you're seeing right there at 33. Where's the 200-day? It's going to provide some resistance. So if you buy here at 30, maybe you get a nice 10% pop here over the weekend or something. Again, this would be a long-term entry. Don't go balls deep on this. Put your little toe in today. I might put my little toe in today. I will tell you, Webull. I like Webull like P. Diddy likes his baby oil. If you didn't hear, P. Diddy's lawyer blamed Costco for his baby oil obsession. But I do love Webull. And if you go to my link tree down here, you can get Webull as well. Sign up and get free stocks. What I want to point out, and part of the reason I'm saying all of these stocks right now, is Webull emailed me last night. We want to inform you of changes on your cash management. We will be adjusting our cash management program's annual percentage because the Fed lowers rate. Effective October 1st, the 5% APY associated with your account will move to 4.25. With interest rates reducing from the Fed, your cash is going to make less. If the Fed is managing to a 3% inflation rate, which it looks like they might be, they're hoping it goes down to 2%, but we haven't hit 2%, it's at 3%. If the new norm is 3% until the stimulus money that they paid out for COVID is out of the economy, you're not making money in cash. You're just not making money in cash. I will point out, you're not making money in cash. As rates start to come down, you will see those rates in interest rates start going down. Now, here's the thing. Don't take your rent money and put it into the market. Don't take your car payment money and don't put your grocery money into the market. Be smart about it. Do not have 50% of your money sitting in a 4% CD that pays you 4% annually. Don't do it. It's just not going to work out well. Cash put it at least in gold. Gold is having its best year yet. I showed you a few days ago, gold isn't great for long term, but at least buy GLD or something. Okay? That's my point today. Is I just want to make sure we're getting in. Now, one of the life-changing investments you could probably make is Bitcoin. And when you see something like this, the level literally everyone and their mother is waiting for right now, gain 65,000 or suffer the consequences. Why? This is Bitcoin against the US dollar. Okay, this is from Trendspider. And what you see here are little kind of half circles, little button hooks, you could call them. Okay, what you're seeing are lower highs. Okay, and you're seeing lower lows. Okay, this one right here, the green right there, that's a higher low. That's bullish. Okay, if you don't hold 65 and go above this and create one of these greens, which is a higher high, because look, you're starting to button hook a little bit. If you don't create some type of new higher high, then what do you have? You have lower lows and lower highs. And that's a problem. So that's why, again, I am adding to Bitcoin because of the month of October. But if we don't gain 65,000, that could be a problem. And when we go over to 64,420. Now, the 52-week range goes all the way up to 73,000. But that's going to be key this week, is trying to gain 65. And you only got a couple of days. So keep an eye on that one. Again, my two cryptos are iBit and MicroStrategy. You can trade those. Meta. This was amazing. Okay, Mark Zuckerberg, Meta, said Instagram Reels will now automatically dub content. And they will lip sync to the dubbed content. So the lips will move. Anybody that's watched, I think it's Money Heist, or any of the, even Squid Games on Netflix, you know how annoying it is that the lips don't match the actual actor's voice. This is bullish. If Netflix is able to take foreign content and basically use AI in maybe some famous actors' voices, that just cut their content costs in half, if not, 30% of what it was. That's huge. And Meta is doing this on a daily basis in real time with AI. There is no way that Netflix isn't looking at this. And it's huge. Here's the example of it. Okay? Zuckerberg put on an absolute masterclass yesterday. They are moving into the hardware portion. Right now, if you paid $1,500 for Apple Vision, it's sitting in a closet. I know people who are still using the Oculus stuff and MetaQuest. Okay, the MetaQuest 3, and they showed off Orion, which is a mixed reality glasses. Now, Orion will not make the light of day until sometime 2026, my guess is. Okay, he just showed it off. He had Jensen Huang put it on. This is huge. So now they've got the AI play, they've got the hardware play, and they are a place where billions of people go on a daily basis to mindlessly scroll. And Zuckerberg is leading this charge. He made the pivot from the metaverse to actually making money, and then saw all of this AI stuff and said, you know what? We can pivot. We just spent a ton of money on the metaverse. We've got the power to compute. We've got the engineers to compute. We can do this. And he led that charge. And so if you bought down here at 103 in October 2022, you are now 6 times your money. Almost 6 times your money. That's huge. And again, Meta's Llama, its lightweight language models fit on the devices. That's enormous. Apple hasn't been able to launch their AI stuff, Apple Intelligence stuff, on devices yet. It's all delayed. Will they? Absolutely they will. But until that point, Meta is leading AI because A, it's free. B, it's already in the apps that you use. That's what I was telling a friend yesterday. That's why I like Google. OpenAI still has to develop the mainstream app that people will go to. It is so far an outlier, but I use 2 things. I use Google Gemini because it's on my phone and I can easily get to it on the computer and it's free. And I also use Copilot, the Copilot app on my iPhone, because I can get GPT-4 for free. So I use those 2 mainly because they're already on my device. ChatGPT, it's not a regular thing that I go to. Because I don't want to use ChatGPT 3.0 because it just doesn't work for me. B, I don't want to pay for 4.0. So I just use Copilot because it gets there. But Meta is far and away just an app that you already have on there. And again, they like it. So I think Meta is so far in the lead right now. And I think that's why you're seeing the stock price at all-time highs. When I was saying buy this under 500, it just seemed like the best opportunity out there. Now, I've got exposure to it because I own it individually. Plus, I own it in a ton of ETFs. Now, what's Wall Street doing? They're chasing the price up. JP Morgan just raised their price target to $640. Okay? $640. The recent Meta conference showcased the company's continued progress in AI. We believe Meta has earned the right to spend big. Mark Zuckerberg likes nothing more than spending, and they're making it happen. They're releasing devices and services that you will use. Honestly, the talking feature that OpenAI has been touting but hasn't really rolled out yet, Meta has it. Snapchat has it. But nobody uses Snapchat, but everybody uses Meta. So it's all over their devices. They're doing a really good job. I like that company. I like it a lot. Let's talk about the hardware portion. NVIDIA in the spotlight as Susquehanna calls out strong Hopper pricing ahead of Blackwell. NVIDIA will continue to go up. I said it before. There are super expensive stocks in this market, and then there are stocks where the actual valuation makes sense. As long as Meta is showing off all this AI stuff, all of these hardware stuff, it is absolutely going to be a winner. NVIDIA, you don't think Mark Zuckerberg's not on stage with Lisa Su from AMD. He's not on stage with the Qualcomm CEO, even though they're still using those chips. He's on stage with freaking Jensen Huang. And there's a reason for that. There's a reason Jensen Huang was the one that they gave the new glasses to try out. Because those two are in partnership to expand AI. And so as long as you're seeing Meta doing all of this spend and they're putting it out there, and Zuckerberg is, make no mistake, he was spending on the metaverse, and that's why the stock went down to 100. He's going to spend the same amount on AI. The street is just a believer that AI is better than the metaverse. He was spending $10 billion a quarter for 30 people to show up to a Snoop Dogg concert and buy some real estate that's out there in the artificial intelligence. No, artificial intelligence needs some real world stuff, and he's doing it. So I like both NVIDIA and I like that. Now, let's talk about another winner, because year to date, NVIDIA is not even your top winner yet. Its VST has just become. This is powering AI. We're in an AI market and a GLP-1 market. So make sure that you have exposure to these. This is power VST. Okay? Tesla, I said it before, that 260 level is going to be a key resistance level. They reached that 260. They reached it. The hype is real. They reached 260. Are you in this one? We went over this one earlier in this show, and I say it was going to be a long show. We're at 37 minutes right now. But Tesla, they have two big events coming up. The Robotaxi event, invitations went out yesterday. You're seeing a pop today. It's up 1.32% at $260. I would expect it to get to 270. I would also expect it to pull back a little bit. Okay? There is an options play in here. There is an options play. Best buy Tesla call options ahead of 2 October catalyst events, Goldman analyst said. This article points out options plays that Goldman Sachs is saying could make you money. And they like it. They outline it below. I'm not going to go into it because I don't understand options. I am not playing this one. But go to the newsletter. Again, if you're not subscribed to the newsletter, it's right here. Down here, the fifth link. Newsletter, Substack, right down there. You get the newsletter for free. And that article will be linked in the newsletter. Okay? During the week, it is 100% free. You can just sign up for it. It comes to your email box. But again, Goldman is saying buy these Tesla options. Micron earnings. Let's talk about earnings, because yesterday I said this one on reduced expectations. They killed it. Micron killed it. They were recently double downgraded because nobody believed them. They weren't making money. Now shares are 27% higher than that level after its Q4 beat. It wasn't just the beat. It was they guided higher. And so that's going to take all of the chip sector. That's why NVIDIA is up today. That's why AMD is up today. That's why Qualcomm is up today. They're going to take the chip sector up. That's why Broadcom is up today. So again, they're going to basically bring all of these stocks up. And Micron is up 18% to 113. Let's talk about Micron in Trendspider. Hold on one second. You're going to see me reload Trendspider right now. It's stuck in something. Micron, let's go to the 4-hour algorithm right here. And we're going to say, okay, where did our algorithm get us in? Because I think it's like $98, $88. $88. Boy, if you got in on the hour, and again, the algorithm makes you 88% versus 84%. I think I posted this. The algorithm's pretty good at this one. If you just went in, you're up 30% in 15 days. The algorithm's good. The algorithm, it wins 50% of the time. I made that statement yesterday. Now, did I go in? No. Do I have exposure to MU? Absolutely. In ETFs. I have exposure to this one in ETFs. And honestly, my NVIDIA position is exposed to this, but most of the tech sector is moving up on these earnings. They just killed it. Gross margins were 44% versus an estimate of 36%. They estimated demand for chips will continue to improve. This was huge. I mean, make no mistake about it. This was a huge earnings boost. And this, again, we're in a good news is good news market. When you look at valuation, still not making money. When you look at growth, fantastic. Revenue growth year over year, 17%. Revenue growth going forward, 41%. 41%. They will go positive. What does Wall Street think the price target is on this one? 147. You're trading right now at 113. It makes sense. Again, if you want a stock that makes sense, it's Micron. Those earnings were that good. Now, I would say, wait. If you're not in this one, don't chase it. That 200-day at 114 is providing resistance right now. I would wait a few days because if you have a gap here from 97, 96 all the way up to 112, and then all of a sudden there's something bad that happens in the Middle East, in Taiwan, something goes on, you're going to see this one pull back and it's going to cover that gap down. Wait a few days. It's Thursday. Do not go into this one. If you want exposure to this one, go buy SOXL. Go buy one of the leveraged ETFs on some of the semis because that will at least protect you a little bit. It's not just a single stock. It's all over the place. But if you believe, like I do, that semis are just at the beginning, that's a good one. That's a good one. And let's talk about Costco. Costco reports today. I don't know what to think of this one. It's just too expensive for me to get in before earnings. This one could pop. This one could absolutely pop. They can announce a split, and then all of a sudden, boom, they can announce a buyback, and then all of a sudden, boom. When you look at Wall Street, the price target is $8.98. That's 1% down from where you are today. They will chase it up because they've chased this one up the whole way. Look at how they chased up that price target. So they will chase it up. Make no mistake. I just don't feel comfortable buying this one at the valuation. Doesn't mean it can't go up. Doesn't mean it can't go up. 52-week range, 923. You're at 907. You could go to 923 again. You could easily go. What to expect? Here's an article. Wall Street expects the retailer to post earnings per share of $5.08, while the revenue expected to rise 1.4%. Costco enjoys a large customer base. Again, they just raised their membership price. They have a 90% renewal rate. So it's just that good of a company. I think it is fantastic. I own it through an ETF, but I don't own it outright. I sold. I made the mistake of selling it at $8.50. I thought we were going to go down. We didn't. Education portion. Okay, I've been doing a lot of research on trend lines, and I've been watching a lot of videos on YouTube. Here's one that I watched yesterday. It's for any beginner who wants to know about trend lines. This was a good one. It was a good one. Is it the best? No. But understand, this is a basic 8-minute video on how to draw trend lines. And how do you draw a trend line? Let's see. Let's just draw a weekly trend line on Costco because you'll see it. Where do you anchor it from? You can go here. I have my support. So I'll go down here to the 2022 lows right down there. And if I just want to, cross 2, I can see we're well above that trend line. Now, say I don't want that trend line. Say I just, I want a different trend line because that trend line makes no sense whatsoever. So I'm going to pin this one down here, April 2024, and I go up here. And I hit 3 lines. I kind of hit 3 lines, maybe 4 lines or so. It kind of anchors it myself, and I'm looking at it. We're above that trend line. Could we pull back to 882? Absolutely. And if you pull back to 882, start buying. Anywhere under $900, I think you can buy Costco if you're a shopper at Costco and if your outlook is long term. But I'm not buying this one. I'd rather buy Walmart. I'd rather buy Target. I'd rather buy some of the other retailers that are a little more beaten down. Doesn't mean that those are going to outperform. They're still fairly expensive historically, but I like those. Now, another thing that I liked for education-wise, Ted Weschler, $131 million Roth IRA. This goes over. He was 22 when he started working at a Wall Street firm. He was making $22,000 a year for W.R. Grace in New York City. And that was 1984. He started right out of college in 1983 when he graduated. And they had an IRA plan. He maxed out his IRA. And then when he left, he rolled that into a self-directed IRA. And then in 2010, when Obama had said, hey, we need tax revenues, we're going to allow anybody to roll over a regular IRA to a Roth IRA. It makes it taxable. I did this. I got scared out of it by a couple of people. Again, this is why I tell you don't listen to douches on the internet and douches who give you guidance when you kind of think that you know what's right. This is one of my regrets, is I think it was somewhere in the neighborhood of $80, $100, maybe $150,000. And I took it and I rolled it into a Roth. My accountant at the time, he told me he didn't trust the government. He was a doomsdayer guy or a prepper. And he said, I don't trust that the government's not going to come after that money at some point in time. He goes, you're too young to pay that amount of taxes. It made sense. That's what this guy did, okay? If you're young, start a Roth. This is the blueprint as how you do a Roth. Don't count on 2010. You can always do backdoor Roths. You can always do things like that. But understand, that's what this guy's strategy was. And when he went there, it's now $131 million of tax-free money that he gets access to at 59.5. Every younger person should understand Roth IRAs, and you should understand what the ability of a Roth IRA versus a traditional IRA, what the tax benefits are, and why you should want at least a Roth IRA. If your company has a 401k and it matches, but there's no Roth, or you want to put it 50% into a Roth, 50% of Roth 401k, and 50% into a regular IRA, do it. Do it. But understand your tax implications, and that's what this was about. It was just a masterclass on that. Okay, social request. Sean, he posted in Facebook group, buying coin for a swing. Hold on one second. Daisy, I love you, but stop. There is no reason for you to cry. Sean, buying coin for a swing in at 167. He puts in an analysis, okay? He said his goal is for 1 to 3 months. And he put in an analysis, and it sounded good. I didn't look at the chart when I read this. All I added was, hey, I'll look at it tomorrow, but what's your time frame on the chart that you're using to find these levels? He wrote back, good point. Should have been using a day chart, correct? I've been using 5-minute time frames. The only reason to use a 5-minute time frame is a day trade. If you're holding something for less than a day, use a 5-minute chart. If you are swing trading anything more than a day, use a 4-hour, use an hourly. The chart time frame needs to match your time frame. You can't say, I'm going to use a 5-minute chart for a 1 to 3 month swing trade. That makes no sense, because look at this, a 4-hour time frame chart. We can say, oh my God, this one is in a bullish territory. It told me to buy at 158 and it's swinging up. It's at 170 right now. Well, let's go to a weekly. Because right now, the weekly doesn't look good. If you had said that, 3 months ago, you probably would just be sideways on this one. You can't. Your time frame needs to match. So I'm going to ignore your analysis up there, Sean. No offense, but it just makes no sense. Okay, I would say 4-hour algorithm on coin. it makes you 165% over 24 months. Buying and holding makes you 146%. Both are fantastic. Right now, I'm seeing a death cross on the 50 back here in July, where it started to just break down. I'm seeing this the bullish run with confirmation, but I'm still seeing that 50-day, and I'm seeing twice now. September yesterday and the day before, and today it's using that 50-day as resistance. That scares me. That scares me. And you want to know why? Because when I go and look at the valuation of coin, I know what this is. The valuation's a D-. Why? Because they're not making money. They could make money because they have a forward PE of 30, which is still large in the financial world. Now, Coinbase is the one that houses all of the Bitcoins for all the Bitcoin ETFs, for all of the Ethereum ETFs, and maybe the Solana ETFs. They house all of that. They have some great revenues. You can look at the financials. Their revenues, $4.4 billion. Their market cap is enormous. It's $41 billion. It's a good company. The problem is you've got regulations. You've got, again, if Bitcoin continues to go up, this is just a play on Bitcoin. Is it a safe play on Bitcoin? No. It's just a different play on Bitcoin. But I would argue that this is the same as Bitcoin. Now, the beatdown, it's not horrible. Your average price target, you have 25 analysts. They actually say $247 is the price target. 12 of them say hold. Okay, one says sell. It's a hold. For me, it would absolutely be a hold. And you had a strong sell here at 160. It would absolutely be a hold. I would not be buying on this downturn. I would wait until this weekly gives me some type of indication that 50-day is going to continue to move higher. Now, you could say every time it's been under this 50-day, it was a buy because this entire time it was a buy down here. It's still a brand new. We don't have a 200-day on this one. We don't have a 200-day on this one. So I would trade probably the 4-hour algorithm because at the 4-hour algorithm, I'm guaranteed at least 165%. Well, I'm not guaranteed, but back tested, I make 165%. The problem with the 4-hour algorithm is it only wins 28% of the time. So you have to bank on those huge wins. Do I think that this is a huge win right now? I don't see it. But we talked about it yesterday, how October is huge for Bitcoin. And, we only go back 3 years on this stock. But you can see the weeks of the year, we're heading into the most bullish weeks of the year. There's 1 week here, 44th week, where it's 100%. But again, it's only 3. When you go to monthly, October's 100%. So if you wanted to buy in September, maybe not a bad idea because October, you might be seeing a big move up. So it's not a bad play. I would argue 2 things. A, I think your analysis on a 5-minute chart is just a day trade at best. You can't say, it goes to 172 or there's resistance at 172 because I'm just not seeing it. Where I'm seeing resistance on this chart is probably right here, right now, at about 177. You're right on that one, 177. I'm seeing that one, that first one, but there's no volume to justify anything above that. There's no volume to justify anything above that. I don't see it. Again, this entire downturn, you didn't have anybody buying between 177 and 190. You had nobody buying. You have nobody holding. Everything is below it. There are some people above it at 192 and 200. So it's not out of the realm of possibility that you still have people who are buying and hoping there. If you go back to the highs in July, look, you still don't have volume here to justify that. You've got to get volume in here to do it. Now, are you seeing increasing volume? I'm seeing that blue line go down. I'm not seeing it go up. So I just, again, from a swing trade standpoint, I don't trust it. I'd rather buy it at 190 as the 50-day starts to move and see it move to 240 or 250 above that 200-day than to buy it at 170 and see it slip back down to 150. So that's my thought on it. But again, I'm buying iBit. I'm buying MicroStrategy. I'm buying those for the long term. Jay from Spotify. I'm highly considering buying the software with the algorithm, just hesitant because I'm not sure if I'd be able to use it to its fullest extent. Here was my advice to Jay. And again, this is Trendspider that he's talking about. Here's my advice. You get out of it what you put into it. This is not a plug and play software. This will never tell you. We just went over it with Coinbase. Would I buy it that 158? Probably not. I just don't like it. But if you like coin and you follow this chart and you understand how it moves. Now, Apple, I've been saying Apple, I'm not selling anywhere below 220, but when it gets above 228, when it gets near 230, I am trimming it. So when you understand the charts, you have to look at the charts on an extended basis. So you will only get out of it what you put into it. So don't rush into buying and spending, $600 on a piece of software that you're just going to look at, for 5 minutes a day. That won't work. That won't work. You will get out of it what you put into it. Use free tools. Go and get Thinkorswim. Go and get the Webull desktop software. I used that one. Even when I had Trendspider, I was using the Webull software. I just got used to Trendspider, and I love Trendspider. But go use the free tools. Get good at seeing chart patterns. Use indicators. Find systems that work for you. I think Trendspider is worth it. I was a paying customer before I became an affiliate. I tried to go without Trendspider for 1 month because my yearly renewal had ended in November on Black Friday, and they didn't have a sale to renew it. And so I tried, and I kept emailing those guys, do you have an offer? Do you have an offer? This was when they were in their early days, and they're like, no, we don't have an offer. We don't have an offer. And the second they got an offer, man, I got back in. I just got back in. I felt like a naked church choir boy, when I was didn't have it. So I am 100% a believer in this, but understand you get out of it what you put into it. I was playing with it last night. I found, I'll tell you, last night I was playing with this little pink line right here. This is the anchored VWAP. And I was looking at this. We can look at this in Apple. And I was saying, the highest volume, if you look at this, the highest volume day, and this takes into account volume. It's anchored at the highest volume. That's the volume weighted average price anchored at the highest volume in this chart. Okay, it doesn't go back here because if we slide this one back here, it doesn't make sense. This just anchors it based on the highest volume. So you can customize this. We can let's see, you can 20 window, no bands, 08 open, high, low, close, 4 analysis. It's a pink line and it's anchored to highest volume. We can anchor it to the highest high. If you want to do that, highest high right there, highest high, it's anchored to that. You're trading above the volume weighted average price. Again, the tools are just what you make out of them, and you have to be able to play this. And when you don't understand what an indicator is, use the internet, use Google AI, use Open, Chat GPT, use that stuff. But use the free tools. Understand that stuff before you go and pay for something. Please don't have FOMO. I love Trendspider, and I think it will help absolutely every person that listens to this podcast. But if your portfolio doesn't match the cost of it, go and get good at the tools, the free tools. Trendspider, I just started using this in 2020. I didn't have this. I had other tools. I had Active Trader Pro, Infidelity, free tool. I had, Thinkorswim, free tool. I had Finviz, free tool. I had the free version of Seeking Alpha, free tool. I upgraded to the paid version of Seeking Alpha, became an affiliate. That's it. If you want to start a podcast, you can start a podcast. These are tools. Every tool that I point at you are tools that I use on a daily basis. I will never give you a tool that I do not use. Okay? Now, let's talk about scans, because scans, this is part of what I give you. Scans, Roblox. We talked about it yesterday, how Roblox is on this. Roblox was up crazy. It's down 3% today. We had something happen in the market because all these high flyers that were flying pre-market, they've all pulled back. Tesla is back down at 258. Something happened. Or we must have come oversold or something. Deck, which is in our watch list. This is Deckers, and it's not just boat shoes. They have Hoka brand. That's essentially what's drawn this one up. If you look at a weekly chart of this, we have an entry here at 154. If you look at a weekly chart on this one, your MACD is just resetting. Now, does the valuation make sense on this? Probably not. You're paying up for the value, the growth. Valuation 29 is the PE. PEG ratio, though, is 0.53. Trailing 12 months. Forward, it's 1.89. Their growth is a C+. Why? I have no idea. CapEx growth. They're not spending. That's why they're not spending. But revenue year over year, 20%. Profitability, huge, 55% margins. Huge. Deck, you have an entry here. How does the algorithm perform? It makes you 110% over 24 months. On that kind of stock chart, that weekly stock chart, I want some protection. It wins 44% of the time. Your average win is 11%. If you bought and held this, and you might say, well, it makes 170% over 2 years if I bought and held this. Why would I want to, trade the algorithm? Look at that downturn. If you're still holding at 183, when the algorithm got you out about 170, again, I would have gotten out at 170. Would I have gotten in at 163? Probably not. You didn't have confirmation. Again, the tools are not absolute. You have to, you get out of them what you put in. You have to understand these kinds of things. Now, I would say that this is in a range here between 150 and 160. 140 and 160. I would say that those are absolute ranges. And at 154, I'm thinking that the top is about 162. Is it worth it? Well, if I think long-term, absolutely, I think it's worth it. You're just coming off a 6-for-1 stock split. Your earnings are coming up later in October. I think it's interesting. Leveraged ETFs. These are, again, I am not going short in this market. SARK is double leveraged against the ARKK fund. I am not going short in this market, even though I think we are at the greed section. I am not trying to short this market. SARK, you lose money on this one in the algorithm. It just hasn't worked. Look at this. I mean, it's below the 9-day. Bollinger Bands have cinched up. Do I think that this one's going to be one of the 4 or 5% winners? I don't know. I just don't trust it. I would probably trade this one on the 65-minute. Let's see how it works on the 65-minute. Because I give you a bunch of little algorithms that I've built, the strategies. Now, the 65-minute makes you 1% over 8 months. That's not great, but it's better than losing 9% over 8 months, which is what you've done. Again, this is short. As ARKK has gone up, this one comes back. So the 4 hour is usually what I stick with, but I do have other algorithms that I provide you. You just basically import them. So if you have any questions, I've gone on for an hour now. If you have any questions, hit me up. Everything's on the link tree. Again, remember, if you don't want any of this stuff and you've made it this far and you listen to me, but you're confused and you just want a portfolio that works, AlphaPix is the final tool that I sell. And yes, I use this service. I'm an affiliate for a reason, and it's because that 114% return against the S&P returning 38% at the same time, that's a portfolio that I want to be involved in. It's a portfolio. You have a few options with AlphaPix. You can buy the full portfolio on day one because they give you the percentage. So say it adds up to 100%. But say you don't want the full portfolio like they have. You just want to break it up into percentages. You can 5,000, 10,000, 20,000. You can put whatever money you want into AlphaPix. Just make sure that you have those percentages set up and they give them to you. Second thing is you can just start from today, and on the first, when we get a new pick, buy into it. Say, okay, here's my percentage. What was the last percentage that they put in? Let me put that into this one. If it's $20,000 and they want 20 stocks at $1,000 a piece, and that's what they usually buy, that's what I'm going to do. I'm going to buy $1,000 of this stock. You have multiple options. What they give you is a great summarization of why they picked the stock. And it's fantastic. And you have access to that on day one. No matter how old it is, you have access to it. You even have access to the ones that they have sold. So that's the great part about this is they do tell you when to sell. And there are processes and procedures. They have a strategy. It's based on the quant. It's a great program. Again, that return speaks for itself. So if you have any questions, hit me up. I'm here. You can email me, get to me on any of the socials. It's all on Linktree. Okay.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. and fears.